We start today with the Federal Reserve, Governor Jefferson putting inflation squarely back in the spotlight. Fed Governor Jefferson called the U.S. labor market very resilient, while doubling down on inflation control. The 10-year yield sits at 4.48%, the VIX at 16.29. A resilient labor market keeps wage pressure elevated. That's the Fed's core inflation transmission worry, justifying patience on rate cuts well into 2026. Cyclicals and financials win under higher for longer. The Dow is up 0.32%, while the Nasdaq 100 slips. Rate-sensitive growth stocks feel the squeeze. Watch the 10-year yield closely. A break below 4.30% reprices Fed cuts fast. Holding above 4.60% confirms prolonged patience. The S&P 500 support sits near 745. Jefferson's tone locks in a patient Fed, favors cyclicals and financials, reduce long-duration exposure, and watch labor data closely for any pivot signal. Next up, oil just surged, and we'll tell you exactly why. Shifting now to a major geopolitical flashpoint rattling energy markets today. Trump explicitly opposed Russia or China acquiring Iran's highly enriched uranium, while guaranteeing the Strait of Hormuz, carrying 21% of global petroleum, stays open. This signals U.S. commitment to nuclear non-proliferation and free navigation, directly removing the fear premium that could have spiked W&T offshore far above its current $92.15. Gold falling 1.06% and the VIX at 16.29 confirmed de-escalation pricing. The energy sector, Chevron, and ConocoPhillips benefit from supply certainty. Defense names Lockheed Martin and RTX hold on geopolitical optionality. Watch W&T offshore closely. A break above $95 signals escalation fears returning. A 10-year yield drop below 4.40% or the VIX closing above 18 would signal renewed safe haven demand. Trump's Hormuz guarantee eases crude's risk premium, giving the energy sector and cyclicals room to extend gains. But crude above $95 breaks the thesis. Moving on to our next story now. Shifting now to the biggest U.S. bank, Jamie Dimon is making two bold moves at once. Dimon flagged expenses climbing materially, while simultaneously identifying up to $20 billion in potential M&A opportunities. The cost surge isn't accidental. Inflation, compliance burdens, and technology build-out are forcing JPMorgan to reset expense expectations upward. JPMorgan leads, but regionals KeyCorp, PNC Financial Services, and U.S. Bancorp could rally on consolidation premiums. The financial sector tracks the broader financials reaction. 10-year yield sits at 4.48%. Monitor 2026 results for operating leverage proof. The VIX at 16.29 shows calm, but any meaningful spike reprices the M and a narrative fast. Dimon's $20 billion war chest signals strategic confidence, but if costs outrun revenue, JPMorgan's ROE takes the hit. Moving on, the oil market just made a dramatic move you need to hear. Shifting from markets to monetary policy, Minneapolis Fed President Kashkari just sent a clear hawkish signal. Kashkari acknowledged the labor market is in decent shape, but warned sticky inflation risks becoming embedded in consumer expectations. Traders were positioning for rate cuts by late 2026. Kashkari's comments reset those bets toward a higher for longer rates regime. The 10-year Treasury yield sits at 4.48%. Long-term treasuries and the Nasdaq 100 face duration pressure, while DBC and energy gain from inflation hedge demand. A break below 4.30% on the 10-year signals dovish repricing. The VIX at 16.29, down 4.23%, shows dangerous complacency. Watch for a spike above 18. Kashkari's hawkish stance conflicts with equity complacency. Trim duration, hedge the Nasdaq 100 exposure, and lean into commodity hedges until inflation rolls over. Next up, a major corporate story shaking one of the market's most watched sectors. Shifting from markets to the institution that moves them, the Federal Reserve just got a new leader. Kevin Warsh will be sworn in Friday in a White House ceremony, formally installing Trump's pick as Federal Reserve Chair. Markets are calm. The 10-year yield sits at 4.48%, and the VIX has compressed to 16.29, signaling confidence in policy continuity under Warsh. A dovish Warsh signal lifts the Nasdaq 100 at 729.45 and the S&P 500 at 750.46. A hawkish surprise pressures growth and rebounds gold at 4,400.20. Watch the 10-year yield. A break below 4.30% confirms dovish repricing. The S&P 500 must hold 745 or risk reversal. Warsh speaks Friday. Warsh's inaugural statement Friday is the trade. A rate cut signal for the second half of 2026 could push yields lower and extend the equity rally. Moving on, crude oil just surged, and that story is just as consequential. Shifting from energy markets now, all eyes pivot to Washington and tomorrow's critical inflation data. The S&P 500 is off 0.02%. The Nasdaq 100 down 0.1%, while the 10-year yield has compressed to 4.48%, classic pre-data risk-off positioning. The PCE report directly shapes Fed policy expectations. A hot print could freeze rate cut hopes entirely for Q2. A hotter-than-expected read sends the VIX surging from 16.29, pressuring the Nasdaq 100, Nvidia, and Tesla. A cooler red lifts long-term treasuries and benefits JPMorgan. The 10-year yield at 4.48% is the primary tell. Watch for a break below 4.40% and track DXY at 99.50 as the dollar reacts instantly. This PCE print is make or break for Q2 Fed trajectory. Use long-term treasuries as move as your fastest real-time hedge signal. Next up, we turn to a story rattling global supply chains. Shifting to semiconductors now, where a top analyst is raising a cautionary flag on memory chips. Deepwater Asset Management's Gene Munster says memory stocks can rally further, but Nvidia's trajectory may signal headwinds for peers like Micron Technology. As megacap semiconductor leaders mature, the percentage gains available compress. Munster calls it the law of large numbers constraining the space. The Nasdaq 100 sits at 729.45, down 0.1%. With semiconductor exposure concentrated in megacaps, any guidance divergence between Nvidia and Micron Technology could accelerate sector rotation. Watch the Nasdaq 100 support near 720 and the SOX subindex for divergence. The VIX at 16.29 allows quiet rotation, while elevated treasury yields favor large-cap tech over cyclical memory suppliers. If Nvidia's growth rate widens further from Micron's, it signals artificial intelligence CapEx cycle maturation. Tactically favor mega-cap chip leaders with pricing power over commodity memory names. Next up, we cover today's biggest macro move. And finally, from oil markets to kitchen tables, this next story hits every American household directly. With W&T offshore crude at $92.15, up 3.91% today, Americans are now draining emergency savings just to afford gasoline. Emergency funds exist for medical crises and job loss, not routine fill-ups. This reallocation signals household financial buffers are dangerously thin. The S&P 500 and the Nasdaq 100 face downside as growth expectations compress. The financial sector suffers on rising credit delinquencies. Long-term treasuries rallies as recession fears lift safe haven demand. Watch the 10-year yield at 4.48%. A break below 4.30% confirms recession fears. The VIX at 16.29 looks complacent if consumer data deteriorates further. Savings depletion is a leading recession indicator. Rotate from growth like the Nasdaq 100 into bonds and defensive staples before consensus catches up. If this breakdown helped you stay ahead of the market, subscribe now and hit the notification bell so you never miss a segment.